Welcome all. We'll just go around the board and let everyone introduce themselves. So Ben, you go ahead first.
Yeah, hello everyone. My name is Ben ZHOU. I'm the co-founder and CEO of BuyABit. We are a crypto derivative exchange. We mainly focus on, perpetual contracts, exploring futures, and all of that. So glad to be here. Thank you.
And Peter, introduce yourself, man.
Yes, hi. So welcome everybody. Thanks for having me. So my name is Peter Taczynski. I'm a Senior Vice President of MineBest. And MineBest is a brand that basically builds, operates, and manages mining facilities. We globally we have a total operational capacity of 160 megawatt currently, planned expansion of more than 200 on the way, diversifying also into several other blockchain products and services lately. And again, it's a pleasure to be here. Unfortunately, not in real life, but still, let's do it online and let's have fun.
TEANA, you're up next.
I am Tita Baker-Taylor, and I am the UK General Manager for Crypto.com, which has a number of products. We have a quite simple to use app that allows you to buy and sell cryptocurrency, an exchange, a DeFi swap app, and we just announced a couple of days ago that we'll be launching an NFT platform as well. So I lead our strategy in the UK, and I also handle our regulatory affairs for the market.
And then Dan, who's probably my best friend in Bitcoin. Introduce yourself, buddy.
Thanks for having me on, y'all. I'm head of growth at Kraken. Kraken's one of the oldest crypto exchanges in this space, one of the most liquid and oldest crypto exchanges. In my head of growth role, I focus on user acquisition for the exchange product. Kraken's got a wide variety of different trading instruments. We've got spot, futures, and a few others coming on along the way. So, really excited to join today. Thanks for having me.
And so I'm Peter McCormack. I'm the host of the What Bitcoin Did podcast. So one of the things I'm going to do today, which might annoy you, but I'm going to do it anyway, I'm going to try and focus us, and I'll probably likely keep the subject around Bitcoin because it's the only thing I really care about in this cryptocurrency sphere. And I know that's frustrating, but that would be the only intellectual, honest thing to do in this. Otherwise, we'll start having debates about crypto, and that'll take us off subject. But anyway. So I'm going to kick off with you, Dan. It's been a very strange last 12 months for everyone. It was about this time last year, just shortly after this, that I had my last flight out of Istanbul, came back to the UK, and we went into lockdown. Bitcoin then crashed down to around $3,800. And then ever since then, we've been on this march, and we peaked out at around $62,000. How's the last 12 months been for you?
Yeah, it's been really, I think it's kind of weird, right? We've got the mainstream world with COVID and this kind of dismal overhang with the economy and overhang with life in general. But for Bitcoin, I think this has been a really interesting moment. Bitcoin is kind of like earthquake insurance. You don't really know you need to get it, or you don't feel like you need to get it until an earthquake happens, and then you're like, whoa, I should really get this thing. And what happened with COVID is COVID and how it shook up the economy and the world brought Bitcoin's value prop and highlighted it for the world to see. The world went, oh, now I understand why we need Bitcoin, because governments will do money print or go burr. Governments will print all this money and devalue their currency, and this is why we need a scarce digital currency like Bitcoin. And so, I think it was a very unfortunate moment that I'm sure none of us wish happened, but that moment then allowed Bitcoin to shine in terms of its value prop. And that, I think, has been really crazy to see. We've had institutions, the who's who of the macro traders across the world have recognized Bitcoin as gold 2.0. We've seen companies, Tesla, Square, buy Bitcoin as an asset in their treasury. This is an incredible achievement. Bitcoin, when I was into it, back in 2013, when I first started to really, really get into it, we were considered lunatics for that idea, that Bitcoin is gold 2.0, and to see how far it's come to where the whole world is waking up to its value prop. I think it's a silver lining of, COVID was a terrible thing that had happened, but this definitely, was the silver lining of it, that Bitcoin has finally come out to shine and be recognized by the world.
Very well said. Tina, same question to you. How's this last 12 months been?
Well, I think, as Dan said, it was an opportune time to see, some of the use cases for crypto broadly drawn into the limelight. I think one of the issues that COVID drew out was the difficulty that governments have in dispersing entitlements or benefits, right? So the U.S. government saying, well, if you had a bank account, great. If you don't have a bank account, good luck. Maybe you'll get a check in 6 months. So, me sitting in the UK, I actually did get a stimulus check, and it showed up like 9 months later from the first, or maybe it was 8 months from the first, issuance. So I think things that happened that showed the slowing of how the legacy infrastructure is not as efficient in remittances and dispersing funds also brought into light some of the use cases that we've been talking about remittances and being able to do this in a way that is transparent and efficient and cost effective. So I think that was one of the things that I noticed this year, aside from the bull run, that started to highlight things like Bitcoin as having intrinsic value, that's always called into question.
Thank you, Tina. And Peter, you obviously have a slightly different lens working in the mining world. How's it been for you?
Well, obviously mining is a part of the ecosystem, very important part. And so whatever happens, if there is an influx of capital into the ecosystem, that also benefits mining, obviously, right? So, mining revenues have gone up. The network hash rate has gone up quite tremendously. I mean, in 2020, 2021, the addition was about 80 exahash of the total network. That is roughly the same as the whole decade before. So from the very start, so that just shows you how strongly it has multiplied over the last year and a half, let's say. And we've been in the middle of this basically. But I wanted to add as well to what Dan and TYANA were saying, basically that in terms of obviously the economic recession, something that would have happened anyway, in my opinion, whether COVID would have appeared or not. I already said some time ago, I think it was CryptoFest South Africa in 2019, that once the recession comes, that Bitcoin will finally show its face as a store of value, as a safe haven against inflation. And this is what we're actually seeing, but it's not just something that we're seeing from retail investors. We're seeing this obviously increasingly from institutional investors. And what I think is the most important thing is the mentality change. You can really see that people are changing their mentality. One thing I wanted to say, a good example of this is a tweet that I found from the IMF, which was in January 2021, which was a poll actually, which asked people, do you think that digital assets are really money? And about 100,000 people responded, of which an astounding 80% said yes. And I don't think the IMF expected that, to be very honest. I think they expected half or something along those lines. So I think there is a huge mentality change, and you can see it. Institutional investors want to get in on the action. The Grayscale Bitcoin Trust basically since the inception, has gone up by 23,000%. So we're talking about a huge action and a huge call to action as well, and an according mentality change that you can see across the entire industry and the ecosystem. And I think that's the main issue that we've seen in the last year already.
Thanks, Peter. And Ben, with you, obviously, you've got quite a lot of insight into some of the flows coming into BuyABit. How's it been for you this last?
It has been a crazy ride, and we were, quite busy focusing on all the infrastructures. Simply, if you look for the past 12 months, I don't know if you all remember that we went basically from one of the coldest moments, March, I think 11th last year, when Bitcoin was about 3,000 something. In that one day, it broke down, and to now, I don't know, highest 62K. That's close to, I don't know, almost 20 times in last 12 months. It's extremely crazy ride. So, like Dan said, with this whole COVID thing, and the silver lining is really the sort of consensus and recognition of Bitcoin. I think I was talking to some friends, and they were telling me that 30% of the whole USD ever created was created last year. So I think this is this idea that people are desperately looking for a store of value, and then you can see that this whole bull run, it's being pushed by one and after institution news. I guess starting from PayPal and then MicroStrategy and all of that, and then Tesla, and then I think yesterday was ZHOU starting to putting Bitcoin as reserve. It's the institutional adoption which exactly occurs like the adoption curve, the early adapter, the innovator, and then the institution. So we see it happening, and it's been a great ride to see it happening. And as someone who is running the exchange, and we offer one of the largest Bitcoin, we focus a lot, pretty much only on Bitcoin. It's been insane. A lot of traders coming in, a lot of institutions contacting us on a daily basis, trying to trade, provide liquidity. I would say the infrastructure now is completely different than a few years back when we started. So it's been a crazy ride. Yeah.
Great, thanks. So Dan, obviously, I know you very well. We've spent a lot of time over the last few years talking about Bitcoin. And one of the things I know is that you've been around a long time in Bitcoin years, not like dog years. Well, maybe like dog years. You've been around a long time in Bitcoin years. And each of these bull markets tends to be defined by something. And my feeling is that this bull market will be defined by the arrival of someone like Michael Saylor and the institutionalization of Bitcoin. Do you put this down to the maturity of Bitcoin, the maturity of the infrastructure? What do you put this all down to?
This is definitely a much more mature bull run, I think, in general. I think that's what you're kind of hinting at. And if we dig in further, it's the maturity of Bitcoin as an asset. I've been in the space, as I mentioned, got really, really active in 2013, but started to explore it in 2012. I mean, these were largely retail bull runs in 13 and 17. There was almost no institutional infrastructure. Bitcoin was not taken seriously by the mainstream financial world. It was not, the ownership percentage of the population was under 10%, and we're starting to see this all change. Bitcoin is truly maturing as a new gold 2.0. This is incredible. Again, gold is worth $10 trillion, and that's gold alone as a store of value. If we look at all global stores of value, that's in the hundreds of trillions. Bitcoin is still at a $1 trillion market cap. So we've got a long ways to go, but it's finally being recognized as a legitimate contender. And I think this is really cool because, again, like I mentioned before, we've all hypothesized this would happen, and now it's finally happening, which is amazing. Now, narrative-wise, there are narratives in the 13 and 17 bull run that drive interest and demand, which gets fed into the price as people buy the asset in anticipation of that narrative being met. And this is the loop, the viral loop, in effect, that drives demand, drives the price, and drives overall growth in the ecosystem. So with 2013, it was largely a Bitcoin narrative. Bitcoin is a potential safe haven asset. The Cyprus, when the Cyprus banks did the bail-in, Bitcoin was kind of highlighted as a use case then. But Bitcoin was very tiny and small, and so Bitcoin was kind of more like a rebel money, kind of like a rebel money, a money for people who wanted to get out of the system. 17 was the ICO and Ethereum narrative, same with Bitcoin Cash narrative, where those were serious headwinds for Bitcoin's price. Bitcoin was competing on multiple narrative fronts. But with this bull run, it is almost singularly gold 2.0. Yes, there is the DeFi narrative, but I don't really see that as competitive with Bitcoin. It's also a much smaller narrative and harder to grok or understand than Gold 2.0. Almost everyone can understand Gold 2.0. The DeFi narrative is a little bit trickier for folks to wrap their head around. So I think Bitcoin in this bull run, you've got this combination of different things that are happening. One, you've got your traditional 4-year microcycle, coming off the halving. You've got the macro cycle of the war. And then you also have narrative market fit, where the narrative has never been stronger and easier to understand for Bitcoin, and has never been more accurate in describing how the world perceives Bitcoin. So that narrative market fit is important because that is reflexive with the price, and the price drives it as well. And we're seeing kind of the perfect marriage of that. So that's why I think this bull run is going to be really, really interesting and potentially different than the other ones.
And I've got a question about that coming up because we made a show about what you were alluding to there. Tina, what about yourself? This kind of evolving narrative, this gold 2.0, this arrival of the institutions. How's that come through in your business? How's that affected how you guys operate?
So I think that there is a few things that are, significantly different this time, this bull run, than maybe the 2017. And Dan hit on the maturity of the infrastructure, I think, being pretty key, right? So if you're looking both at retail and at institutional, I remember moments in 2017 when large exchanges couldn't onboard customers. It was at a gridlock. And you would get messages that said, look, come back in a month, right? We're not even going to take your application to onboard. And so obviously that's going to stifle inflow, right, of cash. And we have had some blips, I think, across the board. All on-ramps have experienced some, turbulence during, peak times. But overall, I think people have been really good about kind of keeping the doors open. So that's one thing. And I think the knock-on effect of that from a confidence perspective is, and not necessarily that institutions are, logging on and trading on an exchange, although they very well could. But it gives the impression that the industry is a little bit more safer, a little bit more sound. We know what we're doing. And then I think the other piece from the infrastructure element is there's been regulatory clarity that provides some of those bigger institutions with greater confidence in securing assets and taking on board assets that aren't theirs, and being able to provide safeguarding that they feel comfortable that they're not going to get trouble doing. So from both sides, there is that infrastructure piece that I think is, significantly different. The other thing is the advent or, the emergence of or an acceptance of sophisticated instruments designed around Bitcoin as the base asset, right? So we talked about Grayscale a minute ago. We've had a number of, exchange traded products in different jurisdictions that are accessible. And, we're starting to see some more institutionalized, lending and yield-bearing products that are different than, we didn't have this time 18 months ago or 2 years ago. So those things are all, I think, adding to the ability for people to get involved because they either don't have the regulatory restriction that they did previously, and for those that were sitting on the fence, a little bit more confidence. And to me, it feels like that's how this is materially different than maybe the last bull run. The other thing I'd say is, for 2017 to today, I spend a lot less of my time explaining to people what Bitcoin is. And that's a big statement. And explaining, what the use case is for it, how it works. I still do that a lot, but I do it a lot less. So the conversations that I'm having are significantly more, at depth, and looking at different trading strategies or, different types of products for different risk appetites. And we just didn't have those 3 years ago.
Yeah, that's a really good point on the explaining of Bitcoin to people now. I just talked about before where people have talked about mass adoption of Bitcoin. I say we have mass awareness now. It's not like anyone these days has not heard of Bitcoin. Everyone's heard of it. It's just we still have people who haven't made that bridge into understanding why they should buy it. Peter, with regards to mining and with regards to narratives, what we have in our little world of Bitcoin is we constantly have these anti-Bitcoin people who want to jump on whatever narrative it is to attack Bitcoin, whether it's Tether or mining, boiling polar bears. How has the mining world matured in these last 4 years? And can you speak a little bit towards the FUD that comes out with regards to energy usage?
Yeah, well, first of all, I wanted to say regarding that what TIANA said before that, we don't have to explain much about Bitcoin anymore. But when I try to explain people what mining is about, they're still a bit, flabbergasted, to be honest. So because it is kind of, if you explain it, it's like about the verification and you have to solve an algorithmical puzzle. It sounds a bit weird to people. So it is kind of a thing that we still have to explain to people what we are actually doing when we are talking about cryptocurrency mining. But when it comes to the general narratives, I would like to add a few things to what Dan and TEANA already said, because they pointed out some good reasons why the bull run is completely different. In this year compared to 2017. One thing that I think is very, very important for the general narrative is also the use cases, and especially the facilitators of payments that have added their interest. I think we cannot underestimate the huge importance, because investing is one thing by institutional investors, like Tesla buying 1.5 billion, MicroStrategy, and so on, and all the others, right, that have bought into it. But it is something different when PayPal, Visa, and MasterCard are saying they're into it, right? And that is actually what has happened also in the last half year. And I think that is crucial, actually, that PayPal has said, we're going to allow people to sell and buy cryptocurrency via PayPal, and also buy products via PayPal using cryptocurrencies. And Visa is preparing API pilots for banks globally, so to enable people to actually buy products in 70 million stores, I think, around the world where Visa is accepted with cryptocurrencies. And we're mainly talking about Bitcoin here, I guess, but that should probably involve also some other cryptocurrencies. So that is a thing that really, really adds to the narrative, let's say, and to the acceptance of the, let's say, traditional markets as well, right? Because once the big boys step over the line and basically start waving the white flag, if you can't beat them, join them, then yeah, the others are also following. But when you talk about thought and about people that are, or institutions that are constantly trying to pinpoint the negative sides, there is a few examples, obviously. One of the kind of threats, I think, still to Bitcoin and cryptocurrencies is the political establishment. I've always said that, and I think it's still a danger. Recently, Christine Lagarde has said that she is looking into a potential ban via the G20 on cryptocurrency. Well, I think that she's a bit too late, I think, first of all, because it's become so massive by now that they can't really back off. However, they obviously feel threatened right now, right, in terms of their influence, in terms of their wealth, and so forth. So the whole idea of Bitcoin originally to become decentralized, independent of governments, is actually becoming reality, right? They're really feeling the danger. But so what they are trying to do, obviously, is tell the average Joe who just has heard of Bitcoin but doesn't really still know what it's about, okay, it's dangerous, it's being used by scams, it's being used by illegal proceedings, and so forth and so forth. So that's one thing. The Bank of America is telling people, well, we don't think Bitcoin is gonna happen. It's basically just a money laundering machine, and so forth and so forth, right? So not everybody is into the story. But here's the funny thing. A lot of the people that are institutions that are not into this story are saying that, and then a few years later or a few months later, they're completely changing their narrative. So one good example, last thing that I want to say that I have about this is something that I found online recently, which is a guy called Scott Minerd, who is from Guggenheim. He's from an investor, an investment company just like BlackRock, for example. And in January 2021, and I quote, he said on Bloomberg that the 30,000 price tag of Bitcoin is not justified and the institutional interest is just not up there to hold this level. Subsequently, Guggenheim filed an SEC filing to buy 500 million worth of Bitcoin. On the 2nd of February, a huge transaction of 500 million was indeed, put through, right? 2 weeks after that, he appeared on CNN, the same guy, Scott Minerd for Guggenheim, saying that he adjusted his price estimation, and they now think that BTC has the potential to go all the way up to $600,000, right? So what is happening? They're obviously just trying to dump, and they're obviously trying to keep the narrative negative to quietly get into the action. And that is what is happening all around the world right now. And a lot of corporate endorsements are being put official right now out there about Bitcoin and also other cryptocurrencies. And everybody's trying to get in on it, but trying to do it secretly, even trying, as Scott Minerd, to dump the price, to buy a bit cheaper. So the narrative is very positive, and I think we can all be very, very bullish on Bitcoin and the near future of it.
What about you, Ben? You're obviously in the trading and exchange market. How has the maturing market changed what you've had to provide for your customers?
Yeah, very good question. We've obviously seen, first of all, for Bybit, although we have, I don't know, 8 or to 10 pairs, 85% of the volume come from Bitcoin. So still, most people trade Bitcoin because it's simply the most tradable, the most liquid. One thing we observed is the across broad liquidity and also the number of market makers and the variety of players that are available now in Bitcoin markets. I guess this makes the reason why it's very good to trade and it's a very good instrument. Other than that is the maturity of the clients becoming. Although we focus a lot on retail clients, but they have quite a bit of demand than before. On risk management tool, on different unique features, you can see that they have some forex background or they have some commodity trading background. So you have all these type of requests. And as a exchange, what I see very abundant is that from 2017 or 2018 when we first launched, on either on the supply chain on top of us or below us, you're talking about algo trading, copy trading, all these different players, as well as below us, custodian, all these things. There weren't so many. You can name maybe one hand, you can name them. But this year and last year, especially in 2018, there were a lot more tool feature trading related ecosystem that is now much more mature. So what you see in the traditional trading areas in forex or commodity markets is you pretty much have all that tools, bells and whistles here in crypto. And you have all these different players coming from the traditional background and coming in. And obviously, maybe one of the reasons is they see that the exchange market is a little bit saturated. So they're focused on whether providing a good tool or service or education to the clients. So that has been very good to see, and also simply educators around the social media, different channels and groups to educate people about crypto. I mean, it's much more than before. So. For exchange, I think for us, our job is no longer trying to play everything or jack of all trades. It's to really focus on providing a stable system, because that's what really clients come to you for. And instead of, I think in 2017, exchange trying to do everything, and simply because the ecosystem is not as well matured. So yeah, that's from I guess my point of view. Yeah.
I think we could have had a 2 to 3 hour chat today, but we are limited to 40 minutes and we have about 10 minutes left. So I'm going to try and keep this to 2.5 minutes each-ish for the last question. Dan and I made a show recently about what Dan theorizes as a potential for a super cycle. Whether that happens or not, the big question on everyone's lips is, where does this cycle top out at? Is it 100,000? Is it plan B's 288,000? Is it 400,000? We've seen a range of different prices. But there is definitely a different dynamic happening this year compared to retail-driven cycles, in that previously, I think a lot of retail investors considered, not all, because we have long-term hodlers, but considered the price they would get out and trade in and out. But we now have the ultra-long-term hodlers, the never sellers, the Michael Saylors, who talk about using your Bitcoin as leverage, but never selling that pristine asset. I've heard about mining companies not selling their Bitcoin to cover their costs because they want to, again, instead leverage it. So we're in a very different world this year. Dan, what's your read on this? What are the potential outcomes and where do you think we're headed?
Yeah, so this is part of my super cycle theory. Now, I'm not saying this will happen. I'm saying that typically when I see people going, the final price is going to be between $100,000 and $250,000 at the peak, and this is based on historical data, I tend to want to disagree with them. I don't like going with consensus anyways. I'm typically going against the grain. So for me, if the market is all thinking this is going to happen, that probably won't happen. It'll either be bearish or more bullish in that scenario. This time is very, very different than the previous cycles. We've got institutional money, we've got narrative market fit, we've got COVID. This leads me to believe that, like, what happens when the world wakes up to Bitcoin's value? This isn't just looking at speculative retail cycles. And that's where I came up with the idea of the super cycle. Now, again, I'm not saying that this is going to happen. I'm saying that this is a possibility. And I like bringing it up because very few people even consider this to be a possibility. And I think we would be remiss not to look at it. I mean, Bitcoin in this cycle, and so the super cycle has all those factors, and what this all represents is that Bitcoin could go past 250,000, go all the way to 1 million. It could mean that Bitcoin goes to 250,000, then there's a very muted bear market. Maybe we don't dip again 80%, we only dip 30 to 50%. So that's what I think the super cycle represents, is a kind of magnitude shift in how Bitcoin market cycles work, whether that's more bullish or less bearish.
Same question to you, Tina. Are you seeing any differences this year? Are you seeing a different consideration for Bitcoin being a pristine asset?
Yeah, so that podcast was really great, Dan and Peter. I listened to that particular episode, but the whole series is good. So as a listener, I'll pump that for you. Everybody should listen to it. I think I don't disagree with the whole super cycle theory. I think there's some other things that also lend itself to. So I'm not going to predict the price of Bitcoin, right? I mean, to me, it actually doesn't matter. I'm not a price watcher. So what I look for is what else is happening that enriches the market overall. And so, hate the player but love the game. I don't know. It doesn't necessarily depend to me who's doing what, but things like crypto companies going public starts to kind of push the ecosystem out and mainstream it in a different way. I think that's going to be really important. I think these ways that people that might be sitting on the fence that can get involved in the crypto revolution, and maybe not buying Bitcoin, but buying things like trackers or GBTC didn't exist before. I think that's going to create more depth and richness in the market. And we're also seeing, a whole swath of industry adjacent related activities, right? Different service providers. And it used to be just kind of custodians and compliance. But we're looking at ways to, measure market integrity, which is important for institutional money inflow. We're looking at ways to measure behavioral analytics and how people are changing the way they use this stuff in their lives. So as a shameless plug, Crypto.com has a very popular card. Now, it sounds like, well, who would use their card to spend their crypto? But if you could use your fiat to earn crypto, why wouldn't you want to do that? It's like a great idea, right? And, we're not alone. There are other players that allow this. So these types of kind of adjacent products and services that keep people engaged and involved, and things, earning interest and bearing yield, will create an environment like Michael Saylor is hoping for, where he doesn't actually have to spend his Bitcoin. And that will only come as the market enriches.
Peter, over to you. And I just want to raise again that point that I've heard from a few people now that mining companies are doing everything they can not to sell the Bitcoin they mine to pay their bills. And they are looking at ways now to raise funds to pay their bills and hold the Bitcoin and use it as leverage. Is that something that you guys are doing? Is that something that is relevant to your?
That's an individual decision, obviously. I mean, saying that miners are becoming hodlers, I think that's going a bit far, actually. They still need to pay their bills, and however, the Bitcoin sell pressure from the miners has gone down a bit recently, which generally sort of anticipates a huge price rally up. That's what has happened in the last few price rallies, that when the Bitcoin miner sell pressure went down, it basically announced an upward trend for Bitcoin. But we can't predict the future. I mean, I couldn't have told you that during our chat the price will rise by $2,000, which it actually did right now. So we really don't know. Yeah, it's over 58 again. So it's really hard to predict the future. But a few things that I want to just mention is I think we're going to break out of a cycle. To be honest, I think we are going into when you have the maturing industry, you have innovators, you have early adapters. I think we're now in the early majority phase, and it's going to be the next 2 years. We're going to see the early majority. So we're going to see really Bitcoin coming out from the underground, going into the mainstream. It's by now already the worst kept secret in the financial industry anyways. So I'm very bullish. I think, we're gonna see good signs, and we do need a further convergence of traditional markets and the crypto market, and I think that's going to happen. And I think governments are going to be forced to regulate this, not just for tax purposes, for their own good, but for general reasons. They need to do something to make Bitcoin and cryptocurrency in general much more mainstream. And miners will just follow in this path, let's say. And they're generally pragmatic miners, so they will do what is best in the current situation. So it's hard to tell you something general about that. But I feel that Bitcoin is on its way, and cryptocurrency in general, to become a much more appreciated and accepted market going.
Okay, it looks like we're just about to run out of time, but I just don't want to be fair to everyone. So Ben, just one very final question, and I'll try and keep it simple enough for you. What will the price be of Bitcoin in January 2022?
You leave the hardest.
You just had to, right?
Yeah, I had to do it, man. Sorry, Ben.
$80,000. That's it.
No. Boo, boo.
Come on, Peter.
Well,
I'll
listen,
say $100,000, not less than $100,000. That's what I said.
We're going to be over six figures within the next quarter.
That's like the horror question for everybody, guys.
Yeah. Well, listen, look, it was a great session. Great to see you all. Dan, hope to see you soon. Tina, again, it's been a long while. And Ben and Peter, I hope to meet you at some point, at a conference at some point. John, thank you for this. Thank you for inviting us all onto this.
I appreciate it. Keep
Thanks,
on, guys.
Thanks, guys.